Stocks fell sharply on Tuesday after President Donald Trump's latest threat to China increased fears of an impending trade war between the world's largest economies. The Dow Jones Industrial Average fell 400 points, with Boeing, Dow DuPont and Caterpillar as the worst-performing stocks in the index. The 30-stock index also erased all of its gains for the year. The S&P 500 dropped 1%, with materials, industrials and tech all falling more than 1%. The Nasdaq Composite dropped 1.2%. At some point you've got to wonder how many times stocks are going to react to the same general bit of news. It may all just be a game of one-upmanship as a negotiating tactic to get to some sort of deal, said Willie Delvish, investment strategist at Baird. However, with investor optimism as high as it is, there might not be much margin for error, and there is a real risk that this starts to erode consumer and business confidence. Shares of some of the biggest chip makers fell given their large exposure to China. Qualcomm and Nvidia both dropped at least 1.5%. On average, semiconductor and semiconductor equipment companies get 52% of their revenue from China, according to a recent report from Morgan Stanley. Ford Motor, which also does a large amount of business in China, saw its stock pull back about 2.2%. Meanwhile, Caterpillar and Boeing, considered to be two bellwethers for trade tensions on Wall Street, both dropped at least 3.5%. Shares of railroads and package shippers dropped on fears a trade war would slow the economy and reduce the amount of imported goods for them to ship around the country. FedEx and J.B. Hunt both dropped more than 2%. CSX lost 1.5%. Trump asked the United States Trade Representative to identify $200 billion worth of Chinese goods for additional tariffs, at a rate of 10%. If China refuses to change its practices and insists on continuing with the new tariffs it recently declared, then the additional levies would be imposed on Beijing, Trump said Monday night. Soon after, the Chinese Commerce Ministry issued a response, stating that the latest threat of more tariffs violates previous negotiations and consensus reached between both the US and China. The United States has initiated a trade war that violates market laws and is not in accordance with current global development trends, the ministry said. Further tension in US-China relations could end up hurting some iconic US companies the most, said Jim O'Neill, an economist and the chairman of think tank Chatham House. I often say to people that America's most iconic modern company, Apple, has for 3 years sold more iPhones to Greater China than it has to the US. So ultimately, if the US genuinely takes this kind of belligerent stance, it's going to be the US best-growing companies that will suffer, O'Neill told CNBC. Treasury prices rose on Tuesday, with investors looking for safety amid the stock market sell-off. The benchmark 10-year note yield dropped to 2.873% from about 2.91% on Monday. Commodities, meanwhile, fell sharply as soybeans futures reached their lowest prices in more than 2 years. Lindsay Pugsa, chief economist at Stifel, said in a note that we estimate tariffs on goods both ways would likely shave off a few tenths of a percentage point off each country's GDP.